Peter Schiff was warning. I predicted the 2008 financial catastrophe before it occurred, as was the case. In fact, in the run-up to the crisis, I was preaching about it loudly at several of the money events I attended. Well, I can promise everyone today that the catastrophe that is coming will be considerably worse than anything that occurred in 2008. However, it will be of a different character and will result in a different outcome. Of course, the root of the problem is the same. The Federal Reserve and monetary policy, as well as government fiscal policy to a lesser but still significant extent, are driving hazardous monetary policy. However, I believe the way it will play out in the financial markets will be very different. This time, I believe inflation will be the most crucial factor to consider. I believe the fundamental cause is inflation. Welcome to Cryptique, a channel that gives critical evaluation or analysis, especially in dealing with crypto. Everything regarding money, finance, investing, cryptocurrency, and blockchain-related topics including ICOs, NFTs, and yield farming. When attempting to construct an investing strategy, especially one that will perform well in the following decade, there are several factors that should be considered. You must consider inflation in its most basic form, which is taxation, not just as a monetary phenomenon, not just as the effect that inflation will have on prices, and not just consumer and asset prices. Inflation is a form of taxation. That's essentially what it comes down to. You must grasp this, since governments have two options of funding their spending. The most truthful method is to use current taxation. Obviously, this would be controversial with tax-paying citizens, right? Nobody enjoys spending money to the federal government of the United States government. As a result, politicians would rather not inform voters about how much all of these government services cost when they're continuously competing for re-election. Another method that the government can accomplish is to borrow money. This is actually the first approach. And I'm referring to borrowing it legally from a private lender who is ready to take money and lend it to the US government in exchange for a treasury bond. When governments accomplish this, they are simply deferring taxation till later. Because any money borrowed by the government today must be paid tomorrow. And where will the government obtain the funds to pay back the bondholders? Of course, from those who will be paying taxes in the future. Meanwhile, the taxpayers of present day must pay the interest on the money borrowed in the past. To put it in another way, when the government borrows to fund its spending initiatives, taxpayers wind up paying an even higher price. They must not only repay the money, but they must also repay all the interest. It's the same as if you went out and purchased a brand new television set. It is less expensive to buy it all at once, rather than using a credit card and then giving monthly payments. You may have already paid 2 or 3 times the actual cost by the moment you paid off the television set. You've collected so much interest throughout the years. That's also what happens when you borrow money to pay for government initiatives. The government programs will be a lot more costly by the time you paid off the debt, rather than if you just finance with current taxation. Because it is no longer feasible for the government to borrow money from private sources, it must now turn to a new source of funding. It can't manage to pay private lenders a large enough interest rate to consider this a feasible transaction. This is caused by the case of the size of our existing debt. The US government has borrowed so much money in order to postpone the day of reckoning and kick the can down the road for as long as possible. We've gotten thicker and thicker into debt, and our national debt is already approaching $30 trillion. The US government will not be able to fund such a development. To put it another way, repaying the loan is a complete impossibility. I'm not talking about money with any genuine purchasing power. At this time, however, the debt principal is so large that even if the government were forced to pay a standard rate of interest, it would be unable to make the payments. As a result, the government is currently financing its expenditures through inflation. The government generates debt, and this is how the process works. The Federal Reserve purchases the debt. However, when the Federal Reserve purchases debt, it must extend the money supply in order to do so. When the United States government borrows from a private lender, it is essentially snatching money from one individual and lending it to another. It has no effect on the money supply. Because the money is being loaned to the government, the person who is lending it to the government is unable to spend it. Now the government is handing it over to someone else to spend. However, when the Federal Reserve monetizes that debt and produces new money, the economy is flooded with new spending. It's because the government hasn't taken anyone's money but has instead given additional money to others. An alternative way to reflect about it is when the government charges a tax on you to cover its expenses. It literally robs you of your funds. If it's an income tax, the money is taken directly from your paycheck. Your money is taken by the government and then given to someone else. And now, the money you gained is being spent by someone else. Because the government seized it and gave it to someone else, you are unable to spend it. As a result, your standard of life or purchasing power suffers as a result of having less money to spend. But if the government doesn't increase your taxes, if it simply creates money and gives it to the same person to spend, your purchasing power hasn't been lowered, at least in monetary terms. But now, you have another person who has given all of this money and is able to do anything they want with it. He goes out and spends your money. As a result, that person competes with you to purchase things, resulting in increased pricing. As a result, prices rise from this sort of taxes. Everything increases in price. Consequently, instead of collecting your money, the government steals your money's purchasing power. That's a tax too. When you look at what's going on right now, especially since the pandemic, government debt and money printing are out of control. We've never seen anything like this before. In reality, I believe the Federal Reserve prints nearly half of the money that the government currently spends. So, it's no longer a case of borrowing and spending. It's a case of print and spend. Currently, no one appears to believe that this is a problem. People appear to believe we've discovered the monetary equivalent of a fountain of youth. It's sometimes referred to as modern monetary theory. This is the time when we can take whatever we desire as long as the government prints the money to spend for it. So long as they print money, the government is free. Of course, why hadn't we realized this earlier? Why would we be paying taxes for all these years if we could just print money? The printing press, after all, has existed for hundreds of years. So, what's the sense of all of us owing and paying for taxes if we can have whatever we desire through the miracle of government producing limitless money? The fact is that this is a delusion that will end badly. There's a tremendous contrast between earning income and relying on the government to print money. People's labor is utilized to enhance the supply of commodities or services offered to the general population when they are productive, have a job, and go to work. You've got a job. You are a hard worker. Your labor either contributes to the creation of a product that individuals want or need, or you are assisting in the provision of a service that people require. You get paid in exchange for your assistance. You make a profit. Now you can put that money toward purchasing the goods and services that you helped to develop. The more successful you are, the more money you will get. As a result, the higher your portion of what society generates, the more you can enjoy it. However, when the government simply prints money and distributes it to you, and when you get all these people who are unemployed sitting at home waiting for a government check, they produce nothing. They did not contribute any commodities or services to the economy. Despite this, they can acquire goods and services in the same amounts as if someone had genuinely worked and contributed to society. So, what exactly does this accomplish? This only serves to raise prices. Since if your work contributes to the creation of goods and services, you are now consuming the commodities and services you assisted in the creation of. That's all right. However, if you suddenly begin to consume products and services while not contributing to the creation of any of those goods and services, you will simply have more money chasing you. Prices will rise due to a decrease in supply of products and services, and they'll skyrocket like never before. The irony of it all is that the Federal Reserve has promised more inflation to Americans. That's one promise they're going to follow through on. Matter of fact, they're going to outdo themselves in terms of delivering on it. And contrary to popular belief, inflation is not a positive thing. Inflation is not a good thing. Rising prices aren't helping. A cheaper cost of living is what people desire. When prices fall, this is a sign of progress in capitalism. That is how capitalism functions. Businesses grow more productive when there is true capitalism. They improve their efficiency. They achieve economies of scale. As they do so, the cost of production decreases. As the cost of production decreases, demand rises. Since prices fall, more people are able to buy more things. This has typically been fueled by an increase in the level of living. The government, however, has undermined this beneficent process by inflating the currency. Inflation does not always just causes prices to rise up. Inflation also limits price decreases. And a price reduction would have been a significant benefit to the consumer. It's also a tax if the government denies the consumer that benefit. Because the goods and services you wish to consume are not offered within your reach, the government continues to take your purchasing power. As a result of government inflation, everything has become more expensive. Of course, since the 2008 financial crisis, much of the inflation created by the government has temporarily migrated into asset values. This includes the stock market, bond market, real estate market, and the market for collectibles or other limited supply items. As a result, when inflation raises asset prices, no one complains since the people who possess those assets feel much wealthier. It is plainly difficult to purchase those things if you do not possess them. For instance, if housing prices continue to rise and you do not own a home and wish to purchase one, the fact that prices continue to rise is not a positive thing. The government has now countered this by artificially lowering interest rates. People will be able to afford to overpay for homes as prices continue to rise. However, all of this serves to further disrupt the economy and feed the bubble. However, consumer prices have been growing beneath the surface. The administration does not want the general population to recognize how much inflation there is. They clearly don't like bond investors to know that artificially low interest rates are the key to supporting the bubble economy, as well as enormous and unsustainable government debts in the short term. The Fed's main argument for keeping interest rates artificially low is the absurd notion that inflation isn't high enough. So this is all a deception to defend the government's risky monetary policy, which is geared to defend the government rather than the economy or the people. However, the effects of all this inflation are about to hit us in a way that is far worse than I could have imagined. When I first started attending these money shows, much of it had to do with what transpired during the pandemic, which is clearly not an event that I had put into my forecast, but is still speeding up everything that I've been forecasting and making it worse. Because many people's immediate reaction to the pandemic was, "This is deflationary, right?" This indicates that people aren't going to have demand for stuff because they're remaining at home, which is correct. As a result, they purchased fewer airline tickets and stayed in fewer hotels. On the other hand, people also had no trouble shopping on Amazon. As a result, demand did not cease during the pandemic. It was simply a transfer of funds that consumers did not spend on travel. They merely diverted the funds to other uses. Nothing is produced by the government. The government survives on the private sector's productivity. If the private sector is doing well, the government may be able to take advantage of some of those resources. However, when the private sector is dealing with pressures such as the pandemic, the government should be smaller. The government must make cuts and return those resources to the private sector so that it can use them as needed. We, on the other hand, did the exact reverse. We exacerbated the problem by raising the government's toll. Consequently, we are in more debt than we've ever been. Money is being created at a faster rate than ever before. We have constructed an economy that is more reliant than ever on debt and money printing. That is why inflation is on the verge of exploding. Consider it as a tax once more. The government is about to tax the majority of what you don't have. They're going to raise taxes now. There is no doubt in my mind that the bond government will hike taxes. You're insane if you believe differently. Inflation, on the other hand, will be the principal tax that everyone will have to pay, especially if you're a poor or middle-class individual. When you're working and all you have are your paychecks, inflation will depreciate the value of those wages considerably. Short break. So, if you think this video has clarified some things for you, please consider liking it and clicking that bell button to be notified of our new videos. Also, you might want to consider subscribing to our channel. It'll really help us out. Back to our video. However, this audience's savings are likely to be more important. You are about to be destroyed if you are a saver, if you are retired, or if you are nearing retirement. Inflation is coming to eat away at your entire life's savings. The dollar will be obliterated. That is why, despite the fact that all experts projected an increase, the US dollar is already sinking. It finished the year with a loss. It's now on the verge of a far greater loss. So how do you go about it? How do you engage in an inflationary environment? If you look back to the first decade of this century, you'll find a playbook there. You can also look back to the 1970s to see what was doing well at that time. However, what we're about to go through will be even worse. If you want to go back to that time period, instead of going back to the 1970s, go back to the 2000s and 2010s. After the dot-com bubble crashed, the Fed printed all the money it could to bolster the economy. They attempted to raise housing prices by doing so. The dollar dropped drastically as a result of how they behaved immediately after the housing bubble burst. From 2000 through 2010, the dollar index hovered at 120 before plummeting to around 70. Oil prices have risen from around $20 per barrel to almost $150. The price of gold has risen from under $300 to over $1,900. The price of silver increased from $4 to $50 per ounce. Emerging markets have just annihilated the competition. They were up by a factor of 4 or 5, while the stock market in the United States plummeted during the first decade of the 21st century. The S&P fell in value, and the real worth of US stocks fell even more. If you compare them in terms of foreign currencies or gold prices, you'll notice that the dollar is much weaker now than it was then. I believe that metal, gold, and other commodity prices will be significantly higher in this decade than they were a decade ago. As a result, I believe that the relative benefits that investors will realize from investing in international markets will be much bigger than the large profits that they saw in the first decade of this century. And if you go back to the 1970s, what were the good investments during the stagflationary period? This time, there will be much more stagnation and inflation. What went wrong? The value of Dutch mark has tripled. The yen tripled in value. The Swiss franc has tripled in value. The price of gold increased from $35 to $850 per ounce. Oil has gone from $3 per barrel to $30 per barrel. The collapse of the dollar resulted in massive increases in commodities prices. The only reason the dollar stopped sliding in 1980 was because of Ronald Reagan's election and Paul Volcker's decision to allow short-term interest rates to increase to 20%. The present Fed is incapable of allowing interest rates to grow above 2%. In fact, we can't even afford 1%, let alone 2%. That's how messed up we are now, contrasting to 1980. We remained the world's largest creditor nation in 1980. We are now the world's largest debtor. We still had trade surpluses in 1980. We now have huge trade deficits. As a result, this will be a significant alteration. I believe the dollar will not only depreciate but also collapse. I believe the next crisis will also be a currency issue rather than just a financial one. As a result, the most critical thing you can do right now is to entirely sell off all assets denominated in US dollars. You gotta break free from our bonds. Bondholders, in particular, will be the largest losers when the dollar falls, since all bonds are commitments to be paid in dollars at some point in the future. They're going to purchase a lot less in the future, even if they're only a few bucks now. US stocks are excessively overvalued, and their earnings are mostly in dollars. Sure, there are global corporations that profit in foreign currencies. However, the United States accounts for a large portion of their earnings. Those profits will either drop or be worth less in the future. Taxes, on the other hand, are rising. As a result, whatever profits American corporations make, less of it will be available to their American stockholders. Higher business taxation is to blame. Foreign markets, particularly emerging nations, will benefit significantly from the dollar's decline. It's because they owe a lot of money in dollars. As the value of the dollar falls, their obligations are essentially wiped entirely. For their economies, this is rocket fuel. As a result, these emerging markets will boom. Commodity-linked investments are expected to perform exceptionally well. Physical gold is required as a safe haven and a store of wealth. Don't be duped into buying Bitcoin. Bitcoin is a speculative asset. Bitcoin isn't a shelter for money. It isn't a valuable asset. What you don't have can't be stored. When you own gold, you're essentially storing the metal's future utility. People require gold. They'll always have a need for gold. Jewelers, computer chip makers, the aerospace sector, and dentistry all require gold. The most useful and valuable metal on the earth is gold. It also doesn't decompose. However, gold is used to safeguard your assets. Owning actual gold will not make you wealthy. You'll only stay out of debt. However, if you truly want to get rich or get a lot of richer, I believe gold stocks have great potential. I believe several of these stocks have the potential to increase 10 times, 20 times, even 50 times their current value. As a result, I believe gold stocks will make a lot of money. Gold stocks, of course, carry a lot greater risk. Isn't it true that there's no gain without pain? You can't make a lot of money unless you're willing to take a lot of risks. However, I believe the upward potential outweighs the downside danger. I believe these risks are well worth taking. And with that, this concludes our video. Acquired a lot of knowledge from this? We recommend checking out our other relevant videos from our channel. Also consider sharing this video to any friends or family members who might find it useful. Until next time!